Hello everyone, myself FATHIMATH ANSARA BEEGUM. I'm a CA intermediate student. So the topic which we are going to discuss in the video is a chapter from paper 1 accounting, that is investment accounts. So the first thing which we have to understand in this chapter is what is an investment. Let us understand with an example. Let's say I have 5 lakh rupees in my hand, which is a surplus money. Like I don't have any immediate requirements with this money. So I have a variety of options in front of me. Like I can put it in the bank account, I can purchase car, I can purchase a building. 5 lakh rupees, it's not possible, but still, like I have a variety of options in my hands, right? So now, if I'm investing this money, or if I'm putting this money in such a place, if I'm putting this money in such a place or such a source which is going to give me an income in return, then such source is known as investment. For example, if I'm putting this 5 lakh rupees, using this 5 lakh rupees, I am purchasing the debentures of Reliance Limited. So as you all know, if I'm going to purchase a debentures of Reliance Limited, what am I going to get? I'll be getting a fixed amount of interest on a regular basis, right? So when I purchase the debentures of Reliance Limited, I am going to get a fixed amount of income on a regular basis, right? So this purchase of debentures which I made is an investment. So in short, if we say investments are those assets which is going to give you a return or an income. Clear with that? Okay. Now there are two types of investment. One is long-term investment and another one is current investment. Long-term investment, as you all know, it is those investments which is held for more than one accounting period. And what is current investment? Those investments which are held for less than one accounting period. Right? Now, in this chapter, the topic or the category of investments which we are going to discuss is investment in securities of the company. So now, these securities itself, there are two types. One is fixed income bearing security and another one is variable income bearing security. So what is the difference between these two? Now, for example, as we said in the previous example itself, I had 5 lakh rupees in my hand, and what I purchased the debentures of Reliance Limited, right? So when I'm purchasing the debentures of Reliance Limited, I'm very sure that from this investment or from this purchase, I'm going to get a fixed amount of interest every month or on a regular basis. Even I would be sure that how much percentage is also that, because the debentures name itself would be like 8% debentures, 10% debentures or something, right? Okay, so here when I invest my money or when I purchase a debenture, I am very sure that from this security, I am going to get a fixed income, right? So these types of securities which is going to give you a fixed income is known as fixed income bearing security. And the most common example for this is debentures and bonds. Then what would be variable income bearing security? They are those securities which is going to give you a variable income. For example, let us say shares. So now if I purchase the shares of Reliance Limited, can I say that every year I am going to get a dividend of rupees 10 per share? Can I say no? Only if the company declares the dividend, I will be able to say that I am going to get a dividend of this so and so amount, right? So these are the very basic things which you have to understand it first. So what and all we discussed, what is an investment, types of investment and securities. Now, who are the one who prepares these investment accounts? As you all know, there are so many companies which are issuing their shares, debentures, bonds or their securities to the public. And people are investing their money in different types of securities of different companies. There are so many companies whose core business itself is to invest or purchase the securities of other companies, right? So for all these investors, it is necessary for them to understand how much cost they incur in purchasing each of the securities. So for example, if I take my case, I have invested my money, let's say in Reliance and in Tata and in Wipro, this. So I have to understand how much cost I incurred for purchasing the securities of Reliance, how much cost incurred for purchasing the securities of Wipro and all. And similarly, I have to get a clarity on how much income, if any income I received from these securities, that clarity needs to be made, and also how much money I made by selling these securities, and similarly while selling these securities, whether I made a profit or loss. All this clarity needs to be maintained, right? So while doing an investment, these types of clarity is very much necessary. So in order to get all these clarities, we are preparing investment accounts. And the format and all, if we say, it is very simple. It is like a basic ledger account itself. And investment, as you all know, it is an asset account. So whenever asset increases, debit, and asset decreases, credit. The same thing goes here. So when it comes to the practical portion, we have to discuss both about fixed income bearing securities and variable income bearing securities. In this video, my agenda is to discuss about the practical portion of fixed income bearing securities. Okay, so we'll move forward with that discussion. And there are some concepts which you have to understand in fixed income bearing securities. We'll discuss that. We'll discuss that with an example so that you will get a better clarity. Let's say there is a person named A. A has purchased 10,000 debentures of ABC Limited from market, for example. Okay. And now, I'll just write the calendar also for better clarity. Okay. So now, let's say A purchased these 10,000 debentures on 1st April. A purchases 10,000 debentures on 1st April. Now, when it comes to debentures, you all know for debentures, the company is going to pay fixed amount of interest, and the company is paying their interest on half-year basis. So, on 6 months basis, they are going to pay. So, here let us take for example, the company is paying their interest on 31st of June and 31st of December. Okay. So, are you clear with this? Okay, fine. Now, as you all know, the A purchased the debentures on 1st April. Now, the last interest which was paid was on 31st December. Now, in April, the debenture is in whose hand? In A's hand. In May also, the debenture is in A's hand. In June also, the debenture is in the debentures are in A's hand. Now, on 31st June, when the company pays you the interest, the company is going to pay the interest for 6 months. Am I right? Yeah, 6 months, because the last time or the last date which the interest was paid was 31st December. So when it comes to June, the interest which is paid by the company would be for 6 months. But do A deserve the income or the interest for 6 months? No, because till March, A did not have the debentures. It was in somebody else's hand, and only on 1st April, A purchased the debentures, right? So on April, A deserves the interest. On May, A deserves the interest. On June also, A deserves the interest. It is A's income, right? It is his income. But for January, February, and March, it is not A's income. But when the company pays the interest, the entire interest comes to whose hand only? A's hand only, right? So the thing which we do is, whenever we are purchasing the interest or whenever we are purchasing the debentures on 1st April, along with the cost or along with the price of debentures, we are also supposed to pay interest to the other person. Means from whom we are purchasing the debentures, it is not only enough to pay the actual price of the debenture. Along with that, we are also supposed to pay him the interest. Why? Because after 6 months or when the company pays the interest, a full amount will come to our hands. But we are not deserving, or it is not our income. It becomes our income only if the debentures is in our hand. Only then, if the debentures is in our hand, then we are deserving, or else it is other person's income. So here, in such a case, our deserving income or our income is only for 3 months. So, and these 3 months, the income is of other person. So when I am purchasing the debenture on 1st April, so 3 months interest, what I have to do? I have to pay to the other person. Similarly, if we are doing this sales also, the same implication applies. For example, we purchased on April, right? Now we are selling this debentures on, let's say, September. We're selling this debenture on September. Now, when you're selling this debenture, you see 31st June last you got the interest. In July it was in your hand, right? In August the debenture was in your hand, right? In September, let's say 31st September you sold. So in September also it was in your hand, right? So July, August, September, 3 months it was in your hand. So who deserves the income for these 3 months? Of course, this person A. A deserves the income, right? It was in his hands. So now in 31st December he sold. That means in October, November and 31st September he sold. That means in October, November and December he does not deserve, and it is the income of the other person. So when we are selling, along with the sale value, we will also take what value from them? We will also charge interest on them, right? So these 3 months interest we will take from the other person, because this 3 months income is our income, right? So this concept is very important. And one more thing which you have to understand is there is two types of prices that would be given in the question. One is X interest price and another one is term interest price. So if in the question it mentions X interest price, that means the price given in the question is excluding interest. That means if they say 120, you paid 120 X interest price. That means this is just the cost or price of debenture. Interest is not included in this. Interest you have to calculate separately. But if they say come interest price, that means interest is being included there. So if they say 120 come interest price, means in this 120 itself, price of debenture is there, cost of debenture is there, and interest will also be there. This you have to identify. When you see a question, you should be able to identify, or you should keep in your mind that X interest price means that interest is not included, come interest means that thing. And one more small concept which you have to keep in your mind is about brokerage. As you all know, when you're purchasing securities, certain purchasing or selling securities, there will be a brokerage charge. So now, if we are purchasing a security for rupees 10,000, for example, if you are purchasing a security for rupees 10,000, they will be charging us a 1% brokerage. Okay, so now can we say that the cost incurred for us for purchasing this debenture is just 10,000 rupees? No, the brokerage is also directly charged, right? The brokerage is also the cost incurred for purchasing itself, right? So the cost would be 10,000 and 1% also. So that would be the actual cost incurred. And similarly, when it comes to sales, let's say you sold your debentures and you got 12,000 rupees. Okay, so while selling also you will have to pay what? Brokerage. Let's say they are charging a brokerage of 1% for sales. Okay, so can we say that we got 12,000 rupees by selling the debentures? No, from that 1% they have already charged as brokerage. So net amount only we are getting as what? Sales value, right? So full 12,000 are we getting in our bank account? No, after charging brokerage only it will come, right? So this thing also you have to keep in your mind while preparing accounts for fixed income bearing securities. Now we'll take an example of one question and we will discuss about fixed income bearing securities, and after that we'll wind up. Okay, so I'll be taking the question from Institute study material itself. One second. Give me a minute, guys. Okay, fine. Okay, so we'll be taking a question from our Institute study material, illustration number 1. Okay, so here, Y Limited issued 12% fully paid debentures of 100 each. Interest is payable on 30th September and 31st March, as we said in our example. Now, on 1st December, Bull and Bear purchased 10,000 of these debentures at 101 X interest price. Which price? X interest price. That means what is interest included in this? No, this is only the cost of debenture. Interest is not included. And what they said is there is also a brokerage at 1% of X interest amount. On 1st March 2023, the firm sold all these debentures at 103 X interest price, again paying brokerage at 1% of X interest amount. So they have asked us to prepare investment accounts. It's very simple. As you all know, it's like a normal ledger account itself. There is only a very little difference. So I'm not drawing the lines and all. We can spare time. So there will be a date column, particulars, and there will be 3 columns. First one is the face value or nominal value. That is the actual value of the debentures. Okay. And another column is the interest. Like how much interest you earned or paid. Both is there. No, like when we are purchasing, we'll have to pay interest, and when we are selling, we'll get interest. So interest column will be there, and then the cost column. That is the actual cost incurred by you in purchasing the debentures. Similarly, this side also date, particulars, nominal value, interest, cost. So as they said on 1st December, right? On 1st December, purchased 10,000 of these debentures at 101 X interest price. Now nominal value, how much you say? You tell me. 10,000 debentures they purchased, and they have already given the face value, which is 100. So 10,000 into 100, the nominal value would be 10 lakh rupees, right? 1st December. What is the journal entry? Tell me, when you're purchasing a debenture as an asset, what would be the journal entry? Debenture account entered to bank, right? So to bank. The nominal value would be 10 lakh. Now, before that, one thing you have to understand is the debentures name is 12% debentures, right? So the headings which you have give is also very important, that in the books of Bull and Bear, 12% debentures of Y Limited. That heading also you have to give. So now nominal value it is given, and how much is the cost incurred? That calculation is very important, which we discussed. The points and the concepts which we discussed is very important here. How much cost you incurred for 10,000 debentures? We paid how much rupees? 101 rupees. Is interest included in this? No. If interest is included, that we have to minus. But here, as they said, X interest price, interest is not included here. Okay. So 101 into 10,000. Now, is that the only cost which is incurred? No, we have also paid what? 1% brokerage. So 10,000 into, as you can see here, the calculations, 10,000 into 101, 10 lakh 10,000 will also be there, and also the brokerage which you paid, 10 lakh 10,000 into 1% will be there. So the total value which you will get is 10 lakh 20,100. Clear? 10 lakh 20,100. And now the most important calculation, interest. So now you tell me guys, when did you purchase the debentures? You purchased the debentures on 1st December. Now, when you are going to get the interest, as we already know in the question it is told that the interest is payable on 30th September and 31st March. So you purchased it on 1st December. So the last time the interest, the previous interest was paid on 30th September. So October and November, you don't deserve the interest. December onwards, you are deserving the interest. So for October and November, 2 months interest is deserved by the other person from whom you have purchased. They are the one who should get the interest, right? So when you are purchasing, interest you have to give to the other person for this 2 months. So that interest you have to calculate. So interest will we calculate on the cost or the nominal value? Always we calculate it on the nominal value, right? So interest calculations is also very important. So how much would be the interest? You tell me. 10,000 debentures into 100, right? So 10 lakh is the value. 10 lakh. How much is the interest percentage? 12%, right? So 10 lakh into 12% into 2 divided by 12. Am I right? Yes. 10 lakh into 12% into 2 divided by 12 would be the interest. Okay, fine. That is the thing. So the interest value would be 20,000. Now, purchase entries are completed. Now, what they said in the question. After this, what they said in the question is, on 1st March 2023, the firm is selling all of these debentures. When we are selling the debentures, what would be the journal entry? Bank account entered to debentures, right? So the journal entry would be by bank. So on 1st March, by bank. So all of this debentures is being sold. That means what? 10,000 debentures is also being sold. That is 10 lakh face value debentures is also being sold, right? So what is the sales value which we are going to get here? As they already given in the question, it is 103, right? 103. We are selling it for 103. So 103 into 10,000 is the sales value which we are going to get. But will full amount be coming to into our bank account? No, as they already told, there is a brokerage of 1%, so that will be deducted. No, so the brokerage of 1%, that is 10,000 into 103, 10 lakh 30,000 less brokerage 1% will be deducted. So 10 lakh 19,700 will be the amount that comes into your account. Okay, so that also you'll have to record. So now when you sold, when you purchased, the cost incurred was 10 lakh 20,100, and when sold, the amount which you got was 10 lakh 19,700. From this itself you can understand that you have made a loss, right? You purchased it for 10 lakh 20,100 and you sold it for 10 lakh 19,700. So the loss which you have made is 400. Right? Now, the only thing which we have to fill is interest. Now, you see, when did you sell your debenture? On 1st March. So, next, when is the interest you are going to get? On 31st March. That means, when did you purchase? December, right? So, December it was in your hand, January, February, 3 months it was in your hand, right? You sold it on 1st March. So December, January, February, 3 months the debenture was in your hand. So the 3 months interest you have to get, right? So that 3 months interest you have to calculate and give. So that's it about fixed income bearing securities. I hope you're clear with this. Thank you so much.